I appreciate you tuning in for another video here from Netpicks. And today I want to talk about the Klinger Volume Oscillator. Before I get to that, I just want to give you an opportunity here to download the 8-Minute Options Trading Cookbook. And I'm going to cover some stock charts today, and one of the best way to trade stocks is through the options market. You could download this strategy book that was written by Mike over at Netpicks. And the link is up here on the corner of the video, or you can find it down in the description. Okay, so let's get back to it. It's a trading indicator, obviously, and it's going to use both price and volume to highlight the longer-term trend directions in the market. And you should know that there are some people out there calling it a leading indicator. It's not a leading indicator. It needs present price and it needs present volume in order to plot, so it can't be leading. So let's dive more into what it is. It was actually brought to us by a gentleman named Stephen Klinger, and it's designed to measure the trend of the money flow that's based on volume and price movement. And while it was designed to measure the longer-term money flow trend, it can also highlight shorter-term fluctuations in the market. That sounds kind of confusing, so let's make it even more simple and explain it this way. Volume moves through every single market on every single period. Price movement, no matter how small, it's taken into account when this oscillator is being calculated. As for price, the oscillator is going to use the low price, the high price, and the closing price. A calculation is made in the background, and the result is called volume force, a VF. So to get the oscillator, we get the VF, the slow 55 EMA, a fast 34 EMA, plus a 13 EMA signal line. And no, you don't need to calculate it yourself. Your package should do that for you. And if you just look at it, it really does resemble the fast stochastics due to that choppy look of the oscillator, the green line. And it's actually used in a lot of the same way. And if you really need a deep dive into the formula, you can find that anywhere on the web. I'm not going to cover it here. So how can we use it? There are actually three main ways that we can use it. And one is trend direction. The second is buy and sell trading signals. And three is bullish and bearish divergence. So if we're going to look at it as trend direction, there's two ways that we can actually do it. The first way is to wait until the KVO indicator line, not the signal line, crosses over the zero line. Traders can also use a crossing of the signal line through the KVO as a sign for direction. This is a little bit more aggressive. On this chart here of Apple, we're going to use a crossing of the zero line to indicate both downtrend and uptrend. So you're only going to look at long or short trades depending on where that line is in relationship with the zero line. Which means if the green line is above the zero line, you're looking for longs. If it's below, you're looking for shorts. Now, if you are an aggressive trader, you may buy or sell when that trend changes direction. And that would keep your strategy pretty objective and fairly mechanical. Now, what about if we just change direction with the crossing of the lines? Well, looking at Apple again, let's compare it, right? You can see here there's just way too many crosses for the trend to be useful here. You got to remember, the Klinger was designed to have a longer term trend direction view. And if we use the crossovers, it defeats that purpose, right? So we can actually look at it as buy and sell trading signals as well. So when we use that, we're going to use it much the same way we would MACD. And looking at this chart here, if you trade every single crossover, you can see that you're in drawdown and you're going to get caught in some whipsaw. This is not the way you want to use it. And if you're really into data, I ran an unoptimized backtest over 404 daily candles. The entry was at next open. And we're only looking at longs here. And the net profit was 16.6. The buy and hold outperformed it. The positions were only 32. 44% wins, but the drawdown's huge, 94%. The average win looks good, but the average loss is kind of high. And the average return is 0.76, which it's not too bad. Now, obviously, if you're going to design a trading strategy using this, you're going to need more than just the crossover. Well, let's look at divergence. And what is the divergence? Essentially, it's when a trading indicator shows one direction and price does another. In this chart here, we can see that price is heading up while the indicator has crossed the signal line heading towards zero. That would be called bearish divergence. Bullish would be the opposite. Now I'd use divergence as a warning sign, not necessarily a trade setup. And then I'd just be on alert for price action, which would include a break of the trending structure, which is the higher highs, higher lows. What about adding other trading indicators? That's always an option, but keep in mind we do have an oscillator here. So in a broad sense, it is a momentum indicator. So you don't want to add another oscillator or momentum indicator to it. So what can you use then? Well, I consider trend lines to be an indicator, and then you can use breakout pullbacks. Just make sure if you're using trend lines that you have rules that you can repeat. For me, I need to be able to connect the last swing low into the high for a valid trend line. So if I can't connect that low that leads into the high, I have to adjust my trend line. And you can look for breaks of trend lines that coincide with the crossing of the indicator and the signal line and trade the breakout as you see here. For a conservative approach with a little bit of confirmation, look for the breakout and then a pullback in price as well as the indicator. And you can see a lot of those on the charts there. And when that happens, you would just trade it as you would any other breakout pullback, putting two moving averages together. Keep in mind that moving averages do not provide support and resistance. Okay, but it does give traders a zone of trading opportunity to watch for. So in this example, we're going to look at an 8 EMA and a 20 EMA plus the KVO for a trade strategy. Now consider that breakout trades are taken when price breaks through the averages with the oscillator crossing the zero line. A pullback, that can just be taken when price pulls back to the moving averages as we saw, triggers the cross of the KVO through the signal line. And if you're an aggressive trader, you might just want to trade the hook of the KVO and not wait for the signal line cross to enter the trade. I'll look at a more simplified way of using it. And this actually tested out pretty well for long trades only in the gold spiders. So the rules are pretty clear. The KVO is crossed over the signal line. The KVO is also above the zero line. Price is closing above the 20 period EMA. We're going to enter by the next open. And the exit is simple. So crossing down of the KVO through the zero line. And just make sure you can determine how you're going to identify range-bound markets. And one method is just to watch when price is whipping back and forth through the 20 EMA. 8 years of data, another test. The results aren't too bad. The net profit was 32.4. The asset performance, that's if you just bought and hold, was 7. 80 positions, wins were 50. The drawdown wasn't bad, 7.9. Average win 1.58, average loss 0.84. And I think this is a pretty good jumping off point for traders to investigate a trading plan for yourselves. Let's wrap it up. Obviously, you need to have volume in the market, so FX doesn't really matter. You can't trade that with this oscillator. We need a centralized exchange, and Forex does not have that. We can use the KVO for trend and the signal line for entry. I would skip using another oscillator as we just talked about. Trend lines and price action, that would be my top pick. And I don't think it's very difficult to read. And you can definitely, if you're trading MT4, find an add-on for it on the web. Thanks for watching. Any questions, let me know.